Let's start in Ethiopia. The country will not be opening up its lucrative telecommunications sector or state banks to foreign investment despite seeking a sovereign credit rating. Prime Minister Haile Mariam Desalegn told Reuters that the government there is not willing to open up either one of those sectors since their revenues are needed to fund government projects, including new infrastructure. Ethiopia plans to issue its debut Eurobond, but as Ethiopia seeks to attract foreign money, investors have been lining up hoping to invest in that country's telecommunications company and its 3 state-owned banks. The Prime Minister, however, holds a different viewpoint. He maintains that such investors are simply salivating about these firms as they do not require much effort, read capital, to make profits compared to the capital outlay needed in the manufacturing sector. Still in Ethiopia, that country is set to build its first fully independent power project in its entire history. The $4 billion gigawatt Korbeti geothermal plant will be built in 2 units of 500 megawatts, each over 8 to 10 years. Now, once online, it will be Africa's largest single geothermal power plant. It also dovetails quite neatly with Ethiopia's ambitious plans to become a carbon-neutral economy by 2025. Under its master plan, Ethiopia aims to have an installed capacity of 30 gigawatts by 2020. Much of that, however, will be dedicated to export markets. A $1.5 billion Ethiopian-Kenya transmission line will connect that country to electricity markets in East Africa. And with the completion of the Ethiopian-Sudan and Sudan-Egypt transmission line projects as well, Egypt will have access to markets in North Africa as well. On to the other end of the continent now, miners at Anglo-American Platinum's operations in South Africa started to get back to work early on Friday after the firm struck a deal with the Association of Mine Workers and construction union AMCU to end a near 2-week strike over job cuts. Now, Amplat said in a statement it would grant what he described as, quote, voluntary separation packages, end of quote, to 3,300 employees who had previously wanted to just lay off. The market reacted positively in the short term to that news, but in the long run, however, investors might take a dim view of the situation there as the company has essentially backtracked from an initial target of cutting jobs by 14,000 under intense government and union pressure. Amplat says that the strike has adversely affected production and it is yet to complete a tough round of upcoming wage talks. Now let's head north to Egypt, where the Muslim festival of Eid is taken as a time of celebrations. But as many in that country now realize, this can be especially tricky if you're having Eid during an economic crisis. CCTV's Yasser Hakim now tells us how Egyptians are preparing for this festival amid some pretty tough economic conditions.
It's nicknamed the Meat Feast because eating mutton and beef is a major aspect of the celebrations. But in Egypt, amidst the crisis, this may now be out of reach for most because of the cost of meat.
A kilo was 40 to 45 pounds 2 months ago. Now it's over 80 pounds. We're a family of 6. How can we pay all this? We wait for the Eid to eat meat because we can't afford it all year.
With 40% of Egyptians now under the poverty line and ready cash in short supply, the focus has shifted to farmer and cattle owners who are being blamed for overpricing their animals. Cattle owners say it's not their fault.
The cost of raising cattle has gone up. Transportation and wages also increased, and this affects our pricing. We are actually making losses. People are not buying like previous years.
Trying to ease the burden, the government has introduced a subsidy and has distributed meat and other products into the market at discounted prices.
We have 15,000 government-owned outlets where we sell all goods at 20 to 30% below market price. Now the private sector has to push its prices down to compete with us, and this will be good for our citizens.
The aim, he says, is for the Egyptians to celebrate the upcoming holidays without feeling the economic restraints. But the situation should not be so bad after all. One of the main obligations on all Muslims is that the well-off should give out meat and money to the poor during the Eid. This way, everyone will be happy and able to enjoy the festivities. Yasser Hakim for CCTV, Cairo.
Let's put that story in perspective and head over to Cairo now, where CCTV's Yasser Hakim is standing by with the latest details. Yasser, just how effective really is the government's discount program at lowering the average price of meat in the market so far?
It's not been very effective for two reasons. Basically, it started a bit late. A lot of Egyptians have already bought the cattle, and so that it be slaughtered for the Eid, and its meat being distributed for Eid. Also because of the outlets by the government are not really so big in numbers, so not so effective. Only people who go and buy from the government outlets are the ones who can take at a lower price, but it has not affected in the overall pricing in the market.
Indeed. We also have seen, however, looking back at the inflation data for September, that inflation, headline inflation, is rising fairly quickly between August and September. What's the outlook for the rest of the year?
For October, we expect also that it will stay high. Basically, because of the Eid holidays, prices are up in all products, not just the meat, because of the Eid holidays, and there's a lot of consumers buying at this point, so expect more in October. Now, the government has already put in place, remember, the enforced pricing last month. It hopes that if this succeeds, it will help stabilize the inflation. But at this point, it's not yet successful. The traders are using the higher prices. Inflation is increasing, except maybe in electricity and water. It's not so inflationary, but in food in particular, it's still there. So we expect that by the end of the year, the levels will still be high.
Indeed. Thank you very much for that update. That's CCTV's Yasser Hakim live from the Egyptian capital of Cairo. Let's move on to East Africa now, where Kenya's government cannot account for over $3 billion of cash spent in the budget for the 2011-2012 financial year. Now, that stunning admission was made by the country's Auditor General, Edward Oko, earlier this week at a parliamentary hearing. At those levels, roughly a third of the money spent by Kenya's government between July 2011 and June 2012 simply cannot be accounted for. 21 government units, including State House, had absolutely no documentation to explain how they spent over $16 million. Now, there also was an unexplained difference of at least $10 million in the revenue collected by the Kenya Revenue Authority and what the Treasury recorded as having been received. The Auditor General, Edward Oko, said, and I'm quoting here, there are persistent problems in accounting for revenue. End of quote. Let's make some sense of that data now. Samuel Gishohi is the Business Development Manager for NIC Securities here in the Kenyan capital. He joins us live in studio this week. Thank you so much for your time this evening, Samuel. Earlier this week, of course, as we have mentioned, $3 billion of tax money simply can't be accounted for. But there's not been a lot of outrage in reaction to that story from Kenyans. Why?
Well, I think it's a very unfortunate thing that every time, especially when we have an election year coming up, we do see this sort of thing happening, and I think that it's a major reason for the current government and those who are running government institutions to make sure that we now start to have in place proper auditing and proper accounting systems, not just at the end of the year, but periodic, I think, because I think at the end of the day, if we had this sort of periodic internal audits, then we would start to see these holes and they would be plugged. Because at the end of the day, we have a lot of people coming from government and getting into politics, especially in such a period where we were going into an electioneering period, and I believe that even that movement can have also caused some serious exposure of government coffers to those who were probably trying to increase what they had, maybe for their campaigns or anything. But without accusing or pointing an accusing finger at those, I still can, we saw that a lot of that money also went to interests that were not accounted for. Yeah. So I think it's an issue of making sure that the systems are in place, making sure that, accountability, having the capacity increase and getting professionals actually on board. I'm happy that the current government has even professionals as government secretaries to make sure that we are moving or running the government expenditures in a more professional manner.
Yeah, but Samuel, looking back over the reports from the Office of the Auditor General, this really is nothing new. Year after year, reports red flag government expenditure that cannot simply be traced back. But at the same time, we have the IMF coming in and the World Bank, and they tend to describe Kenya's fiscal management as strong. So how do we explain the variance between these two positions?
Well, I think they've just become very good at probably hiding it. And I think it's very important to realize that, you know, it is an issue of the government becoming more and more accessible to the public, and we need more disclosure on how these expenditures are spent, because if there's no disclosure, then the government continues to be the same old, and it will continue happening if the systems are not changed, if the systems are not taken care of, and if ways are not found to ensure that this is being done professionally. And I think it's an issue of the old rot not yet being rooted out of the government. I remember our former president saying that corruption fights back, and even after years of you know, the Kibaki regime trying to, you know, bring in professionals and try to streamline or to reform the way the government expenditures are run, we are still seeing it. And so I believe there is still a lot of work to be done.
Yeah.
Not necessarily from an external sources, but I think the goodwill must come from the leadership.
Indeed. Finally, though, let's look at the stock market. At the end of the day, at least in Kenya, for example, the NSE 20 share index closing the day at 4,929.62 points, but the general trajectory suggests that it might actually hit 16, 18-week highs relatively soon. What's supporting the gains that we have seen so far?
Well, bulls normally feed on themselves. But I have seen a lot of foreign interest in our market, and I think this is primarily because of the crisis that is happening both in Europe and in the US. And we are seeing a lot of foreign funds coming into our market because they can see that the market is still stable, and that means that they can put their funds here while they wait for their markets to stabilize and then maybe move them there. But that also creates a bit of a risk in terms of if and when they do pull out, will our market levels be sustained? Now, that said, we are still seeing that inflation levels are still under control, still below the 10% mark. We are still seeing that economic growth is still quite good. Interest rates have stabilized, and therefore these usually garners well for for stock markets. And then again, on the other end, we do have a lot of local participation. We've recently had the unclaimed assets bill being passed, and there was a notice to all investors to now come and dematerialize all their shares, and also to claim those funds that have been lying in stockbrokers' coffers, and otherwise they'll be put in this government account. And that has brought a lot of attention to the market, and this has also helped to fuel the activity, because now a lot of people who are dormant investors are now coming back and reenacting their accounts, and realizing that there was an investment account and investing these funds back in the market, which is also bringing a local element to it.
Indeed. We'll have to leave you there for the time being, though. Thank you very much for your insights. That's Samuel Gishohi, the Business Development Manager at NAC Securities in the Kenyan capital, Nairobi. Time for a short break here on Africa Live. Here's what's coming up next. When we come back, we'll be focusing on what the twin issues of the stalemate of the debt ceiling in the US and the potential for default will mean for Africa and the global economy as a whole when we come back.
BizAsia. Asia means business.
Welcome back. Global business leaders and top government officials have met in Washington to discuss the investment climate in Africa's diverse economies. The summit is designed to build on recent progress made in encouraging broad-based investment in telecommunications, finance and transport infrastructure as well. CCTV's Daniel Rangers has the details from Washington.
The CEO Investment Climate Summit is seeking ways to ramp up the level of quality investments in African nations. It's attracting some of the world's top business leaders.
For outside investors, they see really Africa as a monolith and often are guided by headlines about conflict and poverty, when in fact there are a large number of very diverse markets, diverse opportunities. On the other hand, for Africa, getting a much more integrated economy from an infrastructure and a telecoms perspective would be hugely valuable. So actually what's needed is for Africans to think of themselves more as one country and for outsiders to see Africa more as a diverse set of 50-plus countries.
They've been discussing ways to encourage investments which involve businesses working with the public authorities to improve physical and technological infrastructure.
Governments cannot go it alone, neither can the private sector, so there is certainly scope. And we can see across especially Southern Africa, where I come from, we can see an increase in that taking place as we speak.
One such example is the desire of some financial firms to encourage the expansion of electronic payments to reduce the use of cash. MasterCard says this can improve trade and governmental efficiency, convenience and personal security.
So we're moving away from this commodity export-driven growth to something that is much more inclusive and therefore a much bigger opportunity, and I think many sectors are seeing that, certainly we are.
The summit is also looking at persistent barriers, including political risk. The Multilateral Investment Guarantee Agency, or MIGA, which is part of the World Bank, is working with investors to provide expertise and insurance.
They know that some countries have gone through war and difficulties. Some countries are emerging from fragility. So for those places, investors still want to go. They are looking for returns right now. But these returns come at a price. They come at the price of risk. What MIGA can do is to help those investors take the decision.
But top business leaders here are also calling for further improvements in the investment climate, for example, by promoting fair and predictable legal systems. But the overall thrust of this summit has been to encourage quality and long-term investment partnerships and to dismiss the idea that foreign firms are always interested in making a quick buck, particularly at a time when many African countries are growing more rapidly than the rest of the world. Daniel Rangers, CCTV, Washington.
Now, the IMF Intergovernmental Group of 24 on International Monetary Affairs and Development has expressed quite a bit of concern over high volatility in global financial markets, following indications that the U.S. economy may be considering alternatives to quantitative easing. Now, the group is mainly large up of countries with nascent emerging economies from Asia, Africa and Latin America, and they all indicate that the main worry is a potential for negative spillovers and the lack of clearly communicated exit strategies over the timing of a potential end to the Fed's stimulative quantitative easing policy. The grouping called for advanced economies to boost global demand and keep the global economy going as investors and markets are jittery over a possible U.S. debt default. Let's expand this conversation now and reel in Miriam Bemarch is live in London for us tonight. CCTV's Daniel Rangers also joins us now live from Washington. Both of us, of course, keeping a very close eye on developments in Washington. Daniel, let's start with you. No results coming out, at least no firm results, from the 90-minute meeting between President Obama and Republican leaders on Thursday. What are we expecting today?
Well, President Obama's been meeting with an open group of Senate Republicans. That meeting has not concluded, or at least we don't know what the results of it are. At the same time, Obama administration officials are meeting with members of the House of Representatives on the Republican side. So on two fronts, they are trying to find a way of negotiating forward. As we speak, it's not clear exactly what's going to happen, but there is some clarity that the Republicans now are willing to allow the debt ceiling to rise, at least temporarily.
Indeed. Miriam, however, coming to you over in London, the Fed chairman and the Treasury Secretary have been telling their G20 counterparts that this standoff will end before the 17th of October. Now, how have those assurances been received and how are markets pricing them in?
Well, you know, Rama, markets have been a bit more optimistic today just on the signals from Washington that we could see a short-term deal. That's been worrying investors around the world more so than actually a government shutdown. Investors are now quite muted, actually, and some are discounting, really, the possibility of a default altogether. What's interesting, actually, Rama, is that European investors have bought largely into cheap one-month option bets on a short-term U.S. debt deal, index options that expire essentially a day after October 17th, showing confidence that with or without a deal, the U.S. will at least get through this month without a default.
Indeed, Daniel. However, Republicans, of course, say they are open to the idea of raising the debt ceiling, but do we know by how much and for how long?
Well, the House Republicans have come up with an idea, which is for 6 weeks. And during that 6 weeks, they want the White House to come to the table and make some concessions on budgets and possibly even Obamacare. Now, we know President Obama simply does not want to touch Obamacare, his signature domestic achievement. But on the other hand, he's shown some indication and willingness of being able to understand that they need to get the House in order in terms of budgets for the long term. Therefore, there could be some concessions on that. Though many Democrats say they do not want to argue or debate with a gun to their head, and that gun would still be the government shutdown. So we're still unclear about how they're going to be able to wheedle their way out of this. But certainly there's more positive noise coming from both the White House and Congress today.
Indeed. Finally, Mariam, 6 weeks quite literally is a drop in the ocean here. How are European banks preparing in the event that the US fails to reach an agreement on time?
Well, you know, Rama, I have to say, whether Washington officials feel that there's a gun to their head or not, the world is watching, and some of the world's top banks and investors are preparing contingency plans to deal with the potential impact of a default in the coming months, mostly on the $5 trillion repo market of the U.S. government missing a payment on its bonds. The repo market is a crucial financing area for banks who post their holdings of Treasury securities as collateral for short-term loans from money market funds, insurers, and other investors. So now, in order to avoid any contagion effects, banks are being forced to quickly reconsider the Treasury securities they can use as collateral. With all the banking regulations and penalties that we've been seeing coming out of Europe and across the world, banks have been harping on gaining more liquidity, and at this point, investors will step away from any transactions that could be affected by a delay in the debt ceiling.
Indeed. Fascinating stuff right there. Thank you very much for your insights, Mariam Bemard in London and Daniel Rangers in Washington. We'll have to leave it there for the time being. Now, as far as the markets are concerned, it's a bit of a mixed bag, quite frankly, but broadly, gains right across the board. Let's start in Nigeria. The all-share index ending the day marginally higher, up 0.08 percentage points. In South Africa, however, some pretty muscular gains coming through from the all-share index, up by 2/3. The 20-share index in the Kenyan capital, Nairobi, however, snapping back the gains we've seen in the last two trading sessions, ending them a day lower by about 1/3. And the Egyptian market, today being a Friday, of course, is closed. That's business for you this Friday. On to the sport now with Pineda.